On behalf of CrossCheck Media and Biz Talk Today TV, welcome everyone to the Money Path. I am your host, Todd Schoenberger. Joining me today is Geoffrey Klaus. He is the Chief Revenue Officer at Boosted.ai. Jeff, you know as well as anybody else that Boosted has now become a category killer, especially in the way it has engaged itself with different investment and finance firms. I get a lot of experts like yourself on these shows, and they love to tell me how AI has become more of a colleague and less than just a simple tool. What exactly does that look like, though, inside a Wall Street investment team?
Oh, I love that question. It's funny. Yesterday, I think it was yesterday, you had the gentleman from Neuberger Berman on the podcast, and you brought up AI in that conversation. It is certainly a hot topic, and it is certainly playing a huge role in the investment landscape today. And it's not just in investments, right? You see AI across legal, across client service, across compliance, all different facets of the business. And I think whether you're looking at finance specifically or you're looking at the broad spectrum, AI is going to play a critical role in helping us be better at what we do. I get asked a question on a regular basis: is it going to take our jobs? And I always think back. I don't recall, and I wish I could credit who said it, but at one point in time, someone said to me, "Well, did the calculator take away the accountant's job? Did
Yep.
Excel take away the accountant's job? Did TurboTax take away?" Absolutely not. What it did was it redefined the role of the accountant. And
Yep.
today we work with investment firms, and the first iterations of our product were just a front end chat and engagement tool for building agentic models that perform tasks for analysts or PMs. Do we replace the analysts? No, but the analysts now have a different role. They need to learn how to communicate with the LMs. They need to tell the LM, "Hey, I need you to go out these 7 websites. I need you to scrape detail from structured and unstructured data sets. I need you to create me some tables, and I want to do analysis on that table against this thesis that I have." Now, that's the same job the analysts did for the last 10 years, but it used to take them a week or two to get that data. Now the machine just goes out and gets the data for them, then they can focus on what they want to focus on as far as making the decisions. And the same with the PMs as they're constructing portfolios. They've been pulling hundreds of signals over time to define how they want to structure that portfolio. Well, now they can just do it faster. So what we see a lot of these investors covering more stocks, more names. They're making faster trade decisions because they can be ahead of the curve on what they may be implementing a similar thesis regardless, but they can get ahead of the competition. So yeah, when it comes to the question you ask, I think that the roles are just redefining.
Right, right. Well, I've been hearing that. I mean, I have two sons in college, and they bring up AI a lot, and they're worried that they're not going to have jobs. And I said the same thing that you just said in a different way, but my way of saying it is that we've been hearing about technology taking away jobs since there's always a new elevation, something that evolves in technology. I mean, at one point it was the internet. You mentioned the calculator, Excel. It's always something, but if anything, you become agile and you adopt and you actually take that new technology and it makes you better. And I know I agree wholeheartedly with that. But let's turn it back to Wall Street, though. On investment managers, the investment manager that say does not adopt AI right now, how quickly are they falling behind? Or better question, how quickly is the gap widening from those that are using AI to those who don't?
There's definitely a gap, and some people are building a moat even beyond a gap. You could make the same argument back in 2000. Actually, it was really funny. Not to make this personal, but your children. I look at your background and I see the picture back there. When I was coming out of college, I wanted to work on the floor of the exchange. I said I'm going to be one of those guys with the vented jackets that runs around and has a lot of fun. And my dad was he ran mutual funds. He said, "You need to get into the technology side." He said those jobs are going away. It wasn't 5 years later that I worked on one of the very first fixed order routing tools and started putting those people out of business. And it's shocking. So to your children, absolutely what you're saying, adapt. The job's there, just it's not the same job that was had 5 years ago. Um, with regards to the question you asked, and now I'm completely blanking the question you
Don't
just
worry. It's
asked me.
well about investment managers because
Oh,
I really want to know. I mean, using AI with the methodology. of an investment manager, a mutual fund manager, for example, they're
Yeah.
the ones that don't. I mean, I would imagine they will be quickly falling behind, but you explain.
And you're absolutely right. And I actually brought that back to before because back in 2000, you saw the early adoption of algorithms. These hedge funds were building algorithms to trade, and they were adopting technology. That some could argue that was a very early AI. It was a machine taking a signal, behaving with an action. Today, we're seeing the same thing. Whether it's the hedge fund managers, the mutual fund managers, the ETFs, or even just the way that people are behaving within their roles, where we're seeing the biggest change is when you go to more of a retail sector. You take either the large global banks or you take the technology firms like the Robinhoods, the Quest Trades, the Wealthsimples. These are firms who came to the landscape maybe 10 years ago. And today they've garnered upwards of 30% in some cases, individual firm taking up to upwards of 30% of the sub 40-year-old investors. They've acquired these investors because they're offering technology tools that speak to the language of those investors. So are they building moat? Absolutely. Those large traditional institutions and banks have lost a huge market share. And if you add up the Robinhoods, the Quest Trades, the E Trades, the Wealthsimples, you add up the market share they've taken. It's significant of that sub 40 year old range. So is there a moat? Yes. And it's going to be difficult for people to capture back that first time investor again, right? The first time investor generally puts their money somewhere and they stick, and then they get used to the tools and trade with them. But there's going to be new first time investor, and everybody has an opportunity to invest in their tools. We're seeing that as one of the biggest areas of adoption of these large institutions are saying, hey, how do I better interact with that 20 to 30-year-old that came into money for the first time, whether it's through inheritance or whether it's through a a, a good job or a lucky exit from a big company. They have money to invest. Where are they going to put it? And how do you capture their attention? Whether it's speaking the language of thematic investing or whether it's giving them fast, intelligent chat tools so they can talk about the trade they want to make and research the investment they want to make. Or in other ways, it's how do you then maybe give them a pre-selected model? Here's a an index portfolio or basket of stocks that maybe fits your mold. There's a whole bunch of different ways that you can utilize the technology, and we're seeing those firms that are adopting AI into the presentation of their solution are starting to capture far more of that business and getting more trade activity on their platforms and getting more referrals.
How far away do you think we are from AI embracing the emotional side of this? Because that is one thing you still are missing the human element, the emotion part of it. And sometimes it's good not to have the emotion part, especially when it comes to trading. But how far away do you think where we are going to start seeing programs that are going to start thinking like a human?
I would argue that they're thinking like humans today. As a matter of fact, we recently announced a partnership with 11 Labs, who does conversational AI, and they do the voice elements of it. So you can actually have communication with our platform verbally, and you can talk to it.
No kidding.
I would argue that the responses for the last year or so have been emotional in some ways. Now, with these voice components, they actually speak to you with tone and with emotion in the voice as well. It's shocking. It's wild where we're going with this. And I'll say a lot of the people today, the advisors and the clients we have, they want to communicate in real time. And it's not the way that voice worked with the early series or the Bixby's or the Alexas, where you had to be very crisp and clear in your conversation. You can cut this machine off as it's responding. No, that's not what I meant. I meant this. No, I meant the short side of it. Give me the swap of that trade. And in real time, it's listening and responding. And it's wild how good this has gotten and where it's going to go in the future. Goodness, it's all a matter of how we manage it.
Right, right. So you wrote in your Fundfire commentary how some firms are seeing a short-term ROI right now off of their expenses for AI. What kind of productivity gains are you seeing though?
Well, I think they go hand in hand, right? The return on investment is generally in terms of either better, faster, quicker decisions or more productivity. I would say I alluded to this earlier. But a large part of the productivity is you can get the production of 10 analysts out of one analyst who knows how to manage the machines. I'm fortunate enough to sit on a board of a company where the founder has what he refers to as an 80-person equivalent engineering team, but he has 6 engineers. And those engineers, each one of them has the option to use the AI they choose. Some are using Devon AI. There's a whole host of different development tools that they use, but they are managing these machines to build the tools that they want to build. And it's fascinating to see how we can create productivity in our workforce by using tools effectively. And I think this is a big shift in just the global workforce. Again, going back to my earlier point, we're not taking jobs away. The jobs are just changing. And we need people who know how to steer and manage these machines correctly. But as a global industry, we are going to be producing far more than we ever have. And you could argue the same thing happened. I go back to the electronic trading days. I've used just volume charts of the Dow and the New York Stock Exchange in past presentations, but you will see the volume chart starting here and from 1900 all the way till kind of the late 80s, it stayed flat. And then late 80s started to move a little bit. In the 90s, it went like this and straight up. And
Right.
those volumes are possible because we introduce electronic means. Now, are there still sales traders? Yes. There's still jobs in Wall Street? Absolutely. But they're different than they were in 1980 and 1970. And the volumes as a result spiked. Is that is that a bad thing? No, it's a great thing. We're able to trade more effectively. And I think we're starting to see another spike in that now because decisions can be made faster.
Right. And you mentioned the exchange working on Wall Street, and obviously, I mean, everyone knows there's very few floor traders remaining, and they are there for a reason, the ones that are there. But it's not because of AI though. It's just that because you can't compete with free. And when you had the bigger firms like Schwab and JP Morgan not charging a commission, well, you can't compete with that. I mean, what's the point of charging a penny a share if I can go down the street and get zero? So, but things have changed in the evolution of that. So give me an idea, give the audience an idea how Boosted gets involved though with a firm. I mean, you're talking to a mutual fund manager, a portfolio manager. What tool are you providing that PM that's going to make their lives a lot easier?
Yeah, Boosted has been around. I love to say we had the .ai before it was cool. The company started in 2017. We had early products doing portfolio construction. Where we are seeing the largest growth in the adoption of our tools is our product called Alpha, Alpha ALFA, and Alpha is a interactive agent-based platform where you can actually do a fast, intelligent chat and communicate with a system that has a very deep amount of financial knowledge and training. We've been training these models since 2017 to understand our industry and our business. So when you ask it for financial plans and models and understand my earnings, it knows exactly what you're looking for. The amount of data that it provides is extremely deep. We have partnerships and work with the likes of the FactSets, the S&Ps. We're pulling index data. We have over 200,000 news sources globally in a multitude of languages that we then convert back to English and take in consideration our output. Because you know what, the analysts in China look at NVIDIA differently than the analysts in the US. And if all we're reading is one source of data, you're not getting a full picture. But that's what AI allows us to do is scan massive amounts of data and then compress that. We differentiate from a lot of the standard LMs because we're not limiting our responses to just 5 or 10 or the most recent or most common responses. We're literally looking everywhere. But we take that information and we power the communication with the agents. Now, those agents can be for quick, fast Q&A, or they can be used to build and design an entire workflow that you run on an ongoing basis. Look at my portfolio, understand my portfolio, give me a commentary or a notification every day with my stocks move or move out, help me understand what's gone on, and then help me decide how I'm going to invest in the future. We have clients who build deep KPI extraction tools that do web crawling, and these agents go and do this work on their behalf every day. So many of our clients are using the Alpha tool themselves and using the front end portal that we offer. Others are taking this and embedding it via API into their existing platforms.
Oh,
I have a
right.
direct investing business that has 1 million clients. How do I better the service I offer to them? Some people are embedding agents right in the front end, so every client can benefit from a deep earnings analysis on any stock they want. Others are embedding news summary tools that are taking that global news and not just focusing on basic Bloomberg or Yahoo or any other news source. They're looking at everything, compressing it and analyzing it then against the stock movements or against correlating industries to give you highly intelligent data on that. And others are embedding our fast intelligent chat engine so that their clients can ask questions in real time and understand their portfolios.
So you mentioned Bloomberg. I used to use a Bloomberg when I was a trader. So are you looking to substitute the Bloomberg terminal?
You know, there are a lot of new investors and new hedge funds, new investment firms who are looking at the world differently than we did in the past. There are people like you and I who used Bloomberg back in the day, and we know the keyboard, and
Hmm.
they've got us hooked. I always think of Bloomberg when I think of data. The the 20 somethings who are breaking away from Bridgewater, starting their own fund, they don't necessarily care that much about the Bloomberg screens because they can get that same data on their own. As a matter of fact, we've recreated some of those complex screens that you could get from Bloomberg with UI generation right within our platform. It's fascinating what you can do today. So, are we looking to replace them? Not necessarily. They're going to have a place for quite some time. Are they going to get beat in some areas? Absolutely. And you see players like that in this space who are looking to augment their system with AI tools. I'm positive that every one of them are trying to build tools. What we're also seeing is the build versus buy concept is beginning to lean more in the buy. We have worked with
Okay.
providers who spend hundreds of millions of dollars trying to solve an AI problem and fallen short. And then they bring us in and we can plug in and solve that problem in a matter of weeks or months. It's fascinating to see the adoption. And again, whether it's the incumbent data providers or whether it's the technology providers or whether it's the big banks, they're all trying to solve a problem. And most of them don't move at the pace of a technology company like ourselves.
So the data that you're providing, though, I want to expand on this a little bit. You're providing obviously historical data. You're giving trading charts, giving me 200-day moving average, for example. I get all of that. Where are you getting the data from? Because there has to be a data source from somewhere. And if that's the case, if you are getting it elsewhere, how much are you paying for it?
Data is one of our largest expenses as a company, data and compute. So we are purchasing data across the realm. As I mentioned earlier, over 200,000 data sources, news sources globally. We
Yeah.
do have contracts with the likes of S&P. We have contracts with most of those large data providers. We have index providers. We have ORATS data. You name it, we are buying it and we're bringing it in. So that becomes one of our largest expenses. In addition to what we buy, so all the data sources and the news sources, we also have what I call public data. So we have access to the same thing anyone else does, but we can fact check and cross check a lot of the data points we buy by looking into public filings, 10Ks, 8Ks, 10Qs, you name it. We have all of that data that we can actually then pull and source. The way we can compute today, we can compute so much more information in such a short period of time that while it's expensive and AWS may be our largest expense, second to the, right there with the news sources, is you can compute so much information. And that's where we again differ is we don't limit the depth at which we go, and our responses will take in consideration all of that. And then the third piece of data that I will highlight is many of our clients tap into private data, whether they have expert network data, sell side reports, whether they have proprietary conversation transcripts with CEOs. They have all that data available to them that they can run within their own system, within their own walls, but can be considered within their output. So that becomes extremely valuable when people have access to all the information that they can get, including their own, reading their own emails and considering that in their outputs. That's where things become extremely valuable.
So you have re-engineered investment data and to get this investment data. And I'm just curious, what's the future hold for Boosted AI? Is the dream for every bulge bracket and hedge fund and private equity firm to have this device, this the ability to tap into Boosted, or are you looking to expand further into just individual investors?
I've been very fortunate to be part of a few startups, four startups that had great success, many of which have achieved that unicorn status. And one of the operating methodologies and mentalities that we have maintained with all of them is remaining focused on what are you trying to achieve. And what we're trying to achieve is to help the world get better. Can we give you more information to make better decisions? Can we give you more information that allows you to then think differently? So where we're focused right now is improving the experience that any investor has, whether it's a hedge fund, whether it's a global bank's capital markets group or their GAM group, or whether it's individual RAA or all those direct investors at the front end. Every one of them has an opportunity to make their daily experience better, whether it's embedding our API in the bank to service the direct investing, or whether it's providing that hedge fund a tool that they can layer across every pod, or whether it's selling to one of the analysts or PMs within there. So our platform allows us to distribute any one of those different layers. And our focus is to make sure that we're giving everybody the best possible experience so that they can run their business more effectively. If the result is that we take out the incumbents or we compete with the likes of the big players, that's great. Right now, the focus is let's make everybody happy and make their day better, and we'll see what happens.
That's a good answer. I love that. So, well, I'll say it for you. You guys are the 21st century version here. So, and as far as being a data provider, and that's truly excellent. And I'd imagine the growth story is just going to continue from here. Jeff, you said it all. You always, when you come on these shows, I saw a couple of your media clips, and you really bring it because you really are trying to explain the story, the mission, and everything else at Boosted.ai. I would love to have you back in the new year and talk more about it.
I look forward to it, Todd. Pleasure speaking with you.
Likewise. So on behalf of Geoffrey Klaus, I am Todd Schoenberger. Be sure to catch me on Monday on the Money Path. Shayna Sissel is going to join me. You definitely want to hear what she has to say. A lot of interesting items, especially when it comes to sports, business, and obviously Wall Street. So have a great weekend, everyone. Thanks for tuning in. We'll catch you next time. Take care.
Access real-time data and intelligent analytics exactly when you need them. Get the right data at the right time. Learn more at quotemedia.com.